Hey guys, Joel Frank here, market analyst from YouTrading, and in today's video we're going to be taking a quick look across the markets, talking about what's been happening on the final full trading week year. It's been a very quiet one. We already had a look at the calendar earlier this week, but just a reminder, I've got the calendar up. You can see that it's pretty much empty. We've got the weekly unemployment claims out of the US, Chicago PMI data, which I suppose is interesting because it paints a very, very ugly picture of the US economy. But things have been pretty quiet. It's been mostly range bound. I can show you first dollar index. Triple load, there we go. You can see that it's lifting up a little bit, but still remaining below its 21-day moving average, still well below its 200-day moving average, still below this sort of quite important resistance area here, and it's still currently, I think anyway, in a downtrend. Still the most perfect downtrend that you could ever see, technically, but I think, the dollar is in a downtrend that should probably continue into next year. What about US stocks? Well, they're range bound as well. Let me just load that up. You can see actually coming a little bit under pressure Wednesday, but still within recent ranges. And, if we do challenge these weekly lows around 3,750, including about 760, we'll probably bounce because, there's not enough going on this week, really, to trigger a big push lower, for example, to this next area of support. I mean, you always put in a thing year-end markets with a lack of liquidity to stop something like that. But fundamentally speaking, I think probably there's no reason to break lower. And equally, probably no reason for a break higher above this resistance up here, which I just marked up. Recent highs, recent lows, 50-day DMA, 21 DMA. What about oil? Let's have a quick look. It's been rising in recent weeks, or recent days anyway, since earlier in the month. Seems to be in a bit of an uptrend. You've got China reopening now, which is a positive. But he was still very pessimistic about the global economy. So, we're struggling to get above the 50-day moving average and to hold above 80 for a reason. Now, the thing I'm interested in is whether we're going to be able to hold above this 21-day moving average. Previously, or for example, at the beginning of December, it was a good area of resistance. So let's see if that 21-day moving average now turns into support. And then just quickly, we can take a quick look at gold as well. Continues to trend higher in a nice little trend channel. As the dollar continues to weaken, I expect gold will probably continue to move higher. This 200-day moving average here in this area is probably going to continue to act as support. But really, guys, I'm not looking for any massive moves in the next couple of days. Things will start getting more exciting in the first week of next year when we get another big batch of US data. But yeah, guys, hope you all enjoyed the video, and I'll see you all in the next one.